Welcome to Drill Down Earnings. We have quarterly results from Teradyne. Really interesting company at this time in the world. This is a business story behind one stock on the move. I'm Cory Johnson, Epistrophy Capital Research's Chief Market Strategist. That's a mouthful. Well, look, why do we care about Teradyne? Well, among other things, NVIDIA and Teradyne Robotics are collaborating to create a whole new type of robots on NVIDIA's advanced AI Isaac platform. They've got autonomous robots coming out of Teradyne and semiconductor test equipment. And these are, of course, really important businesses right now in the world of AI that we see being built out in such a big way. Or is it? Let's look at the numbers. So Wall Street likes a beat or a miss, and this was a beat, $737 million in revenues and 87 cents per share, slightly ahead of what the expectations were on Wall Street, kind of right in line where I was. Actually, earnings per share was a lot better than I expected because they cut some costs. But let's dig into the business here, look a little bit deeper. So as I mentioned, revenue $737 million was at the high end of their guidance and also ahead of where the other analysts on Wall Street were expecting. Importantly, a 5% increase from the previous year. So their sales have been recovering over the course of the last year, but it's a sluggish recovery, a little bit less than the growth we saw last quarter at 5% this quarter. But dig a little bit deeper here in some more numbers here. So 21% operating profits, EBIT margins, if you will. That's below what it was last quarter, above what it was a year ago, just barely, but kind of steady for this company. Because revenues are up so much over the last year, they're able to spend a lot more on R&D, $117 million spent in R&D in the quarter, which bodes well for the future if they spend that money wisely. But it's not a significant increase in terms of a percentage of revenue, 21% of revenue spent on R&D. But as revenues go up, so does the R&D spending. Now, when we think of what this business is, the excitement might be about robotics, but that's only 4% of revenue. Wireless tests, systems tests, and semiconductor tests, 74% of revenues in the quarter. And the company said on their conference call and in their press release that business is being boosted by AI. They saw 9% growth in that business on a year-over-year basis. But the excitement over Teradyne is probably about the connection with NVIDIA and the future of robotics. And that business isn't doing so well. It actually was down 11% on a year-over-year basis and has been kind of steadily shrinking for 2 or 3 years. So excitement rising, but actual sales of this stuff is shrinking, which they kind of finally confront here. As a result of I think the robotics number and their discussion of that business not doing so well, we saw the stock down 10% after the numbers came out in the wee hours of the morning. And now the stock's only up 23% for the year. So a big hit, I said, to Teradyne for the after these earnings results. CEO Greg Smith was asked about what was going on in this robotics business and why they're so excited about it and why their excitement about it isn't really meshing with reality. Here's what Greg Smith had to say on the conference call.
The thing that we have discovered since we bought these robotics companies is that Teradyne essentially presents a unique value proposition in the advanced robotics space. That if you look at the people that compete with us in the industrial automation world, the folks that are coming from industrial robots and industrial automation, the big players, they're typically not as comfortable in terms of delivering very high-tech products with very, very high-tech, very, very high reliability requirements. What we do with testers is honestly kind of astonishing. The level of reliability and the level of complexity is really kind of off the charts. And being able to bring that mindset and that skill set to our robotics businesses, and also that reputation to our robotics businesses, allows them to really compete well against the traditional IA folks that are pivoting into the advanced robotics space. And it gives us a killer advantage against the pure play advanced robotics folks, because they're typically undersized, they're underscale, they're spending they're spending to a loss. They don't have international distribution or a spares logistic network. And so we kind of think that we are the right player to bring advanced robotics to an industrial scale. So the debate that we have is, is there some point in the future where we may unlock shareholder value by having these two businesses be separate? Maybe. But right now, we think that like the Teradyne is like attaching Teradyne to the advanced robotics name is actually a significant differentiator and will allow us to lead in that space.
So again, unlock shareholder value with these two businesses separating. That seems like a pretty big hint there that there's going to be some M&A activity in the future. At the very least, their excitement about the business isn't showing up in the numbers about robotics that they still haven't seemed to accept, at least from what I heard in the conference call. Nonetheless, an interesting business. All of these businesses driven by AI, even if the robotics business is not taking off. But what's it all mean? What's your big drill down earnings takeaway? And the drill down earnings bite, the one number that tells us a whole lot? Well, here's your summary of Q3 earnings from Teradyne, an essential summary, your drill down earnings takeaway. Okay, so $737 million in revenue, saw a 5% rise on a year-over-year basis. So recovery, yes, but a sluggish recovery. But the bite, the one number that tells us a whole lot, I think is the comparison between their semiconductor test business, their big business, which is doing well, up 9%, and negative 11%, there's your number, negative 11% growth. I will call it shrinkage even, in the robotics business. It seems so exciting. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.